Unmuted?
You're
What-
unmuted.
Is our camera all good?
Yeah.
Do I need to sit a little lower?
That's good.
Are we live?
Yeah. Good? All right. There's no, there might be some viewers. It might be a little bit delayed.
We can't do the thing we did last time and wait 5 minutes because
No, we're up. We're going.
oh, we're
We're
live.
live.
Yeah.
Oh, why did
It's
you tell me
happening.
That's
Welcome, everyone.
welcome to the Health Wealth Protect Yourself podcast. I'm Colby. This is Bob. If you want to go ahead and wave your hand, and then Casey Coleman
Hey,
over
everyone.
here.
Welcome.
And this is episode 2.
This is episode 1.
Okay. Well, we had the
Technically speaking, this
the in-
is
the
the
intro.
non-introductory episode. Anyway, so yeah, we talk about your health. We talk about ways that you can kind of protect yourself in various aspects, and then also talk about finances. And we have a financial expert in here. But we'll go ahead and go around and introduce ourselves, and yeah, talk about. Then we'll get into it.
Yeah, I'll start off. Bob Coleman. I own and operate Idaho Armored Vaults, which is a depository here in Idaho, as well as registered investment advisory firm, Profits Plus Capital Management, which manages a hedge fund. On top of that, I also buy and sell metals as a under the Profits Plus Precious Metals company. So do a number of different things here, try and help the community with saving money on premiums as well as protecting assets on a very unique basis. So
Sweet. And Casey, if you want to do a quick introduction.
Hi, everyone. My name is Casey Coleman. I am the Director of Client Relations here at Idaho Armored Vaults. I've been working with the family business for over the last decade, and I'm help manage the relationships with the client to make sure everything runs smoothly and everyone has a clear understanding of where their assets are held.
Go ahead and move that mic just a little bit closer.
yeah, it kept cutting out there.
Excellent. And I'm Colby Coleman. I basically run the security operations, armored logistics, training, and gear acquisition for the company, and then also co-founder to Black Box Group with Bob Coleman. So if you guys want to know a little bit about that, we sell night vision thermals and various other equipment like ballistic helmets, body armor, whatever it is you need, you name it. So yeah, kind of getting into it, we're definitely gonna brush on the LA ICE protests. I'll just open the floor to Bob and go ahead and let you talk about more or less the financial implications of an event like this and kind of how it can affect the precious metals a little bit, and kind of go from there.
Yeah, I think I put a post out yesterday talking about the risks associated with insurrection and civil discourse and strife and riots and a lot of depositories, a lot of shipping companies like gold dealers and so forth have these if they're having transit insurance policies or depositories having storage insurance policies. A lot of the exclusions to those policies kind of fall into government insurrection, civil disobedience, strikes, and so forth. And so I put something out yesterday just saying, hey, listen, if you're shipping product into an area that may have, a riot going on and the UPS truck driver gets caught up in it, that loss can become an exclusion to the insurance policy. So those are the types of things just to be kind of aware of when you're moving assets around, choosing a depository. Is the depository in a large metropolitan area? Is it sort of off the beaten track? Those are just additional things to watch out for or just analyze when you're initially looking at maybe storing outside your home. The other thing too is the state of the industry right now. There's a lot of misinformation out there with regard to dealers and promoters and so forth. In terms of bank manipulation and I put out an article this morning talking about how much the banks made on trading precious metals in the first quarter of this year, which was about $500 million estimated. Um, and that money was mainly made from the arbitrage between the spread between the futures markets and the spot price at the time, because people may not have remember, but during January, February, March, when the tariffs were a big concern, the premium on the futures price over the relative to the spot price blew out, and the reason for that was because if all of a sudden if you had a futures contract and you were short metal on the COMEX, while you may have physical metal in London, getting that metal over to the US may have incurred a tariff. So there was a premium that started to build in the futures markets. And so banks, what they were doing was buying a lot of gold and silver and delivering it to the COMEX and then selling futures contracts against that and made that's where a lot of money was made. I mean, the returns, I was talking about this. I mean, some of these were 9% returns on a monthly basis. I mean, it was just a massive premium. So that's where that kind of came from. There was a lot of promoters talked about how maybe banks were going to go under and the COMEX was going to blow up and so forth. But in fact, the exact opposite happened, and banks made a fortune. But that's behind us, and the markets now are adjusting to current conditions, which is really the economic uncertainty, the idea where interest rates may be headed. President Trump is trying to obviously get a handle on trade policy, but now he's dealing with domestic issues as well. So these are all things that are now impacting physical metals. The political uncertainty has been driving prices of metals higher. We've been caught in a short squeeze, which I've talked about in previous podcasts, where there's just too much metal on the COMEX. The sellers of that metal are trying to roll those contracts out of the near-term contract or lead month contract, was just July, and that amount of buying that's going into that is pushing prices up. Very similar to what we saw in April 2011. So that's actually what's driving the market right now. The question is that could actually continue for another couple of weeks as this roll kind of continues. There's still a lot of open interest that has to come out of the July contract and be rolled over to September, which is the next lead month contract for silver.
So I don't mean to interrupt, but you kind of brushed on something. I want to come back to this because this is kind of like the tip of the iceberg in terms of information. But you were kind of touching on logistical risks and basically political climates of states and how that can kind of impact the ultimate result, which is liquidating your assets, storing them, or servicing them, and how basically events like what's going on over in LA can make it impossible. Uh, let's talk about why you chose Idaho and sort of the what was the ultimate why behind choosing Idaho as the, I guess, the end all be all state that you decided to store in?
Yeah, I think it's important. I've been in Idaho since 1992. Originally from the East Coast. My wife was born and raised in Idaho, so it was Idaho. It tended to be in '92. We were going through a recession in this country, and the East Coast and the West Coast was really stagnant in terms of economic activity. So that's what brought us to Idaho. Um, on Idaho is interesting because it's obviously a rural state. It's conservatively positioned where it's sort of have this government hands-off approach. So you don't have the liberal bias and the overreaching arm of government that you may have in other states. That makes it a little bit easier to deal with physical metals. Plus, they don't charge a tax, sales tax, or usage tax on precious metals. We don't have a value added tax here at being an investment advisor. When I was looking into all this back in 2005 and six, I started understanding the ownership of metals, how to move them, how to store them, and so forth. And Idaho basically was a fairly green state when it came to regulations. So they didn't have a lot of oversight into this field. So it made privacy a lot easier to provide to the customer. Whereas if you're living on the East Coast, for example, there may be disclosures that have to be filled out, or know your client or AML policies, or the Patriot Act at the time forced a lot of depositories that were owned by dealers or financial institutions to actually record certain pieces of information that maybe the client didn't want to provide. So the metals the metals world's an odd world because we buy metals for privacy, and to, use as an insurance policy, not really to provide that, a lot of information to who we're actually storing it to. So there's a fine balance to try to understand the rules and regulations as well as providing that privacy for the customer. So Idaho actually tended to be a very um, opportunistic state from a standpoint of protecting assets. One that's outside the financial system, from a standpoint of it's not near a major financial center. So when 9/11 happened, that was a big influence. Being in a large metropolitan area that could be, you know, have these unfortunate events happen can make it more difficult to access your metals. It can make it more difficult to actually even get a hold of the company that's actually holding your metals. So having it, doing the research and recognizing, the nice things with Idaho, it's, a state that I think a lot of residents are conservative. They may be having that same type of prepper mentality where they have food stored, or they're they're a little bit more maybe prepared for such an event. So that makes it a little bit easier that if we did have something, and COVID was a great example, a lot of citizens here were really able to deal with that because they actually had food on hand. They didn't have to worry about shortages or going to the store and running out of goods and so forth. And that made sort of this sort of society, I guess, a little bit calmer than what maybe you see in LA right now. LA's, you have a lot of protests going on. They're sort of supported by some of these politicians, which for some reason I don't know why, but it's creating this environment of making it very difficult not only for businesses just to make a living in those areas, but also for the citizens maybe trying to get around. And that's one of the nice things about maybe the rural states. You don't have, it's just more spread out, so you don't have that condensed of population and so forth.
Well, generally too, you also have laws that promote protecting your property a little bit better, and also making yourself more of a deterrent. I mean, there's a reason why majority of mass shootings or shootings where people are unarmed. Ultimately, you don't go to shooting ranges and shoot up a bunch of people.
Yeah.
And there's a reason for that. So, um, LA is definitely not the only city that has had these issues. I mean, Portland, Oregon was on fire like 4 years ago. What was it, 4 or 5 years ago? We definitely had a lot of clients come in and they kind of realized the hard way why living in an area like that makes things very difficult for you, especially if you're trying to protect your wealth and your assets, and the degree of risk that you run into when the laws are not in your favor to kind of be able to protect your property and your loved ones. So I don't know if you have any questions or want to add anything to that.
Yeah, I do feel like Idaho is one of the safer states to not only raise a family, but also protect your assets in, because the crime rate's a lot lower compared to larger cities like Florida, or states, I mean, like Florida, California, and New York City, areas like that. As you've seen how COVID was hit, it hit drastically in those regions. And Idaho is kind of one of the last states to really get hit by COVID. And you're kind of seeing that similar rate with riots and stuff like that. Idaho is definitely one of the last states to really be affected in that way. And so that's one thing I spoke with Bob on, is I do feel like Idaho is a safer state when it comes to storing your assets as well, because we are about 20, 25 minutes outside of the main city as well. And so we're not as close to more of a downtown area where you'll see more of the riots occur and things like that. So it just adds more, I guess, protection in a way for that risk happening. So,
Yeah, and you actually made a good point about COVID. Um, Full disclosure, we were basically unaffected by COVID in terms of our capacity to operate. So that's definitely also something worth considering too. If there's ever an event of a pandemic, it's definitely something else to consider whenever a city does a full lockdown. I mean, it's kind of funny that LA is kind of the redheaded foster child of all this conversation, because it always seems like if there's an event like this, they tend to be the most limiting factor for businesses to take care of their customers, especially from a vaulting perspective. So
Yeah, and that's the important thing because everyone who buys precious metals, the idea behind it is it's there for a rainy day. And unfortunately, when you have these types of events, and hopefully they don't spread, but if something did occur where all of a sudden you start to see protests start to grow into other metropolitan areas, the metals may be going up in price. The question is, can you access those metals and able to take advantage of higher prices if, let's just say, you wanted to sell them, or just actually take delivery of it. Just to the standpoint of, hey, listen, I'd rather now. It's the time has changed where maybe those metals are safer in my house, even though I have risks storing them myself, but at least I know I have control over that versus being in a depository downtown, which, maybe the metals are completely safe down there. I mean, I've when I first got into this business in '06 and I started talking to expats and security experts, for example, over in Thailand, because Thailand had a lot of different coups and political discourses and chaos and so forth. They have a jewelry district, and certainly the assets there are very safe. But the question is, can you actually walk into that vault, take those metals, and walk out the door in the middle of political chaos? And most of the time, I'm told, no. The moment you hit the street, you're on your own. And I think that's important to understand when you're dealing with physical assets, especially when you know we deal with this all the time with armored trucks and so forth, and sort of dealing with a lot of the guys that we train with, learning how to read learning how to read the environment,
Hmm.
and trying to avoid people, avoid contact, avoid any type of conflict. That's actually your best offense.
yeah, it definitely would keep you a lot safer. And pace performance, good to see you. He does have a good question. What is a good vessel or route for someone just getting into investments on a smaller or more manageable scale? Obviously, budget will vary. I don't know if you want to brush on that real fast.
Yeah, you could look at, for a lot of people just getting into, for example, metals or any asset class. So you could dollar cost average. I mean, the markets have become much more efficient on a retail level for smaller investors, where you can buy fractional shares in companies, through your brokerage firm. But on the metal side, not everyone can obviously afford, to put $10,000 down and buy, three gold coins, for example, or a bunch of silver. They may only be able to buy 10 silver ounces a week or a month. So definitely just do your shopping. Try to look, especially right now, premiums are really low. Dealers are very inventory rich and cash poor at the moment. And so that's why premiums have really collapsed, especially on the wholesale level. You're seeing pretty much discounts on everything in terms of selling back to them. And you're starting to see, a lot of the stuff. Uh, you could go to our webpage on our website, goldsilvervault.com, in the pricing section for buying metals. All our pricing and premiums are right there. So you can get a sense. We're just a little bit above wholesale rates. So you can get a sense and compare that with other dealers, either online or locally. But definitely, if you're buying small amounts, check with your local dealer. There's a lot of great guys out there and gals that have been in the business a long time, and I'm very supportive of local dealers. And a lot of times they're trying to move product, and they may have some really good prices, so you don't have to pay the shipping or some of these other fees. A lot of these online guys artificially mark up the spot price, so you're paying a much higher spot price than maybe the actual spot price is. So definitely, call around, or do some searching.
Okay, and I hope that answers your question. And I do want to ask you, because silver's performing really well right now. Obviously, gold's kind of dancing around all-time highs. Uh, Platinum is sort of the topic of discussion lately. It's definitely not where it should be, relatively speaking. I mean, silver's on the same page. I mean, silver is, respectively speaking, should be closer to 48 or 50 relative to what the all-time high was relative to gold when it was up there. But with platinum, it's not really. tracking the way gold is to
Yeah,
silver?
it's been a big underperformer since the mid 2000s, 2007, 8. I think was when it peaked at $2,500 an ounce. This move with platinum, which I've talked about since February, March, I did chart technical analysis reasons why I thought platinum was about to move. I think took a lot of people by surprise, even people that had owned platinum and they were just getting frustrated and throwing in the towel. This is what you look for as a investor, I guess, or as a professional investor that manages a fund. You look at sentiment, you look at technicals, you look at charts and fundamentals and so forth. And there's a story that builds up um, with all that analysis. And I think you're seeing it finally come to fruition. That the sentiment was absolutely horrible. Meaning, the people were just extremely negative, and as a contrarian, that's a positive. Um, and then you had the chart showing this sort of convergence, this pennant formation that was kind of coming to a convergence really beginning of 2026. And that move typically doesn't wait for that apex or that convergence between the lower highs, I'm sorry, the downtrend line and the uptrend line converging. Usually makes its move before that. And that's exactly what happened. You had this beginning of April, you had this false sort of shot down in the markets, which happened with silver, went from 35 or 34 down to 28 and a half, a very violent move down. And then that was it. That's all silver provided in terms of a correction. But these corrections tend to be very violent in a bull market because it's designed to shake you out. It's designed to get people to disengage or to let go of their holdings. So they don't participate in the bull market, unfortunately, because obviously if bull markets were easy, everyone would be rich.
Yeah.
So what we've had is this setup where these violent moves down shake people out, bring in shorts that think, okay, that top happened, it's never going to go back up again. I'm going to short because interest rates are going to rise or the economy is going to recede, and therefore there'll be less demand for metals. And all of a sudden, those people get trapped, and that's what starts taking the market higher. Shorts start to cover, prices start to rise, and then you have large investors, which have been really the predominant buyer, continually coming into the market, but the market forcing them in rather than them picking their price or where they want to buy it. So they're being they're kind of chasing the market in a way, and that kind of keeps prices moving higher over time. That's exactly what's been unfolding, and I've been explaining that since really since the end of 2023. That's how things are going to unfold. That's exactly what had happened.
Yeah, and we're definitely seeing that with silver. Are you seeing it as strongly with platinum?
Platinum is one that it moves. These white metals are very small markets, so they can be pushed around very easily. And platinum, position wise, which when a lot of metal came into the markets and went on to the COMEX or the NYMEX, platinum trades on the NYMEX versus silver and gold trade on the COMEX exchange. So what happens is when all that metal went onto the exchanges, you had the swap dealers or whoever put that metal on the exchange, they shorted futures contracts against it to collect the premium at the time because there was a wide arbitrage there. So what ended up happening was a lot of metal sitting on the exchange, and then the volatility kind of kept managed money to the wayside. So there wasn't a lot of long. So all of a sudden, the setup was basically you had a lot of shorts in the market, and yes, for every short there's a long. But basically, there were the shorts were the predominant player that needed to make an adjustment or needed to make to roll the contract. So whenever you have one side that actually has to do something versus the other side that's more of a sort of buy and hold, that's where the pressure tends to be pushed. And so in this case, the shorts needing to roll at the same time, you had a lot of underexposure or a light open interest of longs out there. You didn't have a lot of longs to sell, that were selling as shorts were buying. So the shorts are really competing for price to close out their short position, which means they have to buy back at any price. And that short squeeze tends to push price higher. And with platinum and silver, they're very small markets, especially platinum. And so when that buying pressure comes in and it has to buy at whatever price, because you have to remember the July contract goes into delivery month in about 3 weeks, they have to close that position out. Otherwise, they have to deliver actual physical metal if they're stood for against.
Huh.
So they're forced to roll, and that's the pressure that you're seeing right now, pushing the market upward. Is this roll that has to get out of the July contract and get into the next lead month contract. Well, will be the next lead month contract, which is September.
So, if I'm understanding this correctly, they're forced to buy the next month.
They're forced to buy back the contract that they're short. So right now,
Okay.
both platinum and silver, the lead month is July. So July is coming up for expiration. But with the way the futures markets work is um, the uh, the delivery month is when you're actually, if you're short, what you do control the process of having to deliver metal, but ultimately, if you have a lot of longs that are standing for delivery, for example, and you're short the contract, uh, when you're in delivery month, those contracts become a lot less liquid and not traded as much because the new lead month contract now is established, and that happens to be September. So the volume really diminishes. So if you have a big position in now the delivery month and you're trying to get out of it, you could have a much greater impact on price because they're just most people aren't trading that they're trading whatever the main volume contract is trading at that time. So right now what we have is this very similar pattern to what we saw in April 2011, where silver went from 35 to 50 in 2 weeks, um, where it just shot up, and that what pushed the price then was the futures market, and that this sort of squeeze to roll out of the May contract at the time and get into the July contract. And so what you're seeing is a very similar pattern here.
Okay. Interesting. I don't know if you have any questions.
Well, I kind of want to speak on if I was a new client, I was looking for a place to store metals, and I was interested in kind of figuring out, okay, where should I store? What should I buy? And I'm asking you, Bob, where should I store metals? Why should I pick Idaho Hammered Vaults over other facilities? And if I do want to invest in metals, what kind of metals do I invest in and how much? I'd like to kind of give a better understanding for people who are in the beginning stages of this and why they should choose Idaho Hammered Vaults over other facilities.
Yeah, I think it's not necessarily, even though we love to try to market ourselves, to me, just choosing the facility that you're comfortable with,
Mm-hmm.
there's a lot of risks to look for. There's a lot of information to gather. Don't be afraid to ask questions with any of these depositories and ask tough questions. What's their business structure? Are they profitable? What's their balance sheet look like? Are they supported by a gold dealer, a
Mm-hmm.
parent company, for example? Because most depositories are either owned by a gold dealer or affiliated with the gold dealer or owned by a financial institution or run by a cash management or cash in transit type organization like a armored truck service. So their main business model is not necessarily storage. So the depository may have ultimately a conflict of interest with between the client and their parent because the parent's interest is transactional volume, is making that money on the transaction and then maybe giving away the storage. And so a low storage fee isn't always the greatest thing to look at because all of a sudden, if like we're in times right now where people aren't buying as much gold and silver and transactional business is low, and the revenues have deteriorated and profitability has deteriorated, all of a sudden that dealer, which is supporting the depository, can't provide that financial assistance. And if to remember, depositories are very low margin businesses. It's not You don't build a depository to get rich. It's you're working for basis points for the most part. And so from that standpoint, if you're an individual out there and saying, well, how do I know I'm dealing with the right depository? Because a lot of people thought they were with the right depository with First State Depository, for example, which had been around for more than 15 years, 15, 20 years or so. And then in 2022 or 23, I think it was 22, the CFTC shut them down.
Mm-hmm.
Turned out that the owner, which owned a dealership as well, was actually siphoning metals from people's boxes for 10 years. And according to the CFTC, $115 million of losses occurred where people really got screwed. And that didn't just happen with retail customers, it happened with people that owned IRAs. And so, so you're bringing up a good point is that not just the individual that says, hey, listen, I want to maybe dollar cost average or buy a few $1,000s worth of metals and store them somewhere, but also it's these bigger size transactions, these IRA accounts that say, listen, I've built up my nest egg in my IRA. It's my retirement. And where do I put this? And so you have to look at again, the dealer, what they're making on the transaction, what type of interaction they have with the depository. Not, the flip side to it is a lot of these programs are designed to capture the transaction. So when you go to sell, you can only sell back to the dealer, for example, that owns the depository that says, we want that transaction, because then we're going to give you whatever price we want to give you, not what you can go out and find in the open market, because we may not ship that metal to, that dealer that you found a better price with. So you got to read these user agreements very carefully. They're not designed uh, to be in the client's best interest. They're really designed to be in the sponsor or the guy who owns the program's best interest. That's you know, the lawyers work for the program or the depository, not for the customer. So
Mm.
understanding that the client does have choice though. And again, focusing on reading the contracts, reading any type of information that you can get from the company itself. Ignore all the marketing and materials. Those are a complete waste of time. Try to avoid listening to people on YouTube. You know, talk great.
Except us.
Yeah, except us. But talking great stories. You have promoters that are just paid to sort of promote their sponsor or who's advertising with them. These. You have to remember this is an unregulated industry with physical precious metals. So there is a lot of questionable activity that goes on, and that unfortunately influences or it has influence over people's decisions. And so they end up making a decision 2-3 years later. They finally understand, oh my God, what I did cost me a lot of money, and now I'm stuck at this place. And if I would want to try and move it, it's going to cost me to ship it. Or if it's too expensive to ship, I'm forced to sell it. And in a lot of cases, the bids that people are getting are horrible. I mean, they're talking, as much as 10% discounts to spot.
And they were originally charging them probably on average anywhere from 5 to 10% over spot on premium.
Oh, big, more than that.
So
Much more.
I mean,
that's yeah.
That's quite the spread. I mean, and we've seen that a lot.
Yeah, and it's something I think on this channel that we're gonna open up the industry a little bit. I think it's difficult to do this kind of stuff on posts on X, unfortunately, where you can only maybe get a good snapshot of some quick information, but really to delve into it, I think this is what we're really gonna open it up here, and not afraid to bring on uh, um, actual customers of not only outside programs, for example, that have seen this firsthand. Bring them on the show. Talk about their experiences. You don't see that anywhere in this
Yeah.
business.
Well, a lot of them generally want to keep a lot of things hidden.
Sure.
And that's one thing that, I mean, ultimately, right? That's why you built this place.
Yeah.
Is ultimately to not run into the same risks or get taken advantage of the ways we've seen others at various depositories or programs. So,
As well as to be very transparent.
oh yeah,
Yeah.
the level of transparency I've seen from us as a company, I mean, it speaks for itself. So I don't want to.
The numbers don't lie.
Yeah, no, and you're absolutely right. I mean, that's one thing where we definitely recommend shopping around and
Yeah.
getting a quote from us. And then even if you don't purchase from us, at least now you have a quote from a reputable business that you can barter with and kind of get a better price elsewhere if you're more comfortable there. So it's more power to the customer, and that's kind of the impact that we're aiming for. And if you guys have any questions, feel free to drop in and comment. And if you have questions, feel free to shoot them. But let's answer that one last part of Casey's question, where if you're a newer buyer, newer to metals, or just younger, and you're trying to establish a position for the long term. Let's say you're putting together um, like 10% of your net worth just to start that nest egg and kind of get that growing. Um, what would you, what products would you recommend and what metals would you recommend?
Yeah, I think yeah, the big thing initially for the younger generation is, be careful on your finances. Manage your debt. I would always say it would be the first thing. Try to pay down that debt. Where your assets, with the way interest rates are, especially with credit card interest rates and so forth, the question is, if you have debt and you're paying 24% or 30%, whatever the number is on your credit card, will your assets return that same amount? If it doesn't, pay down that debt first. Get yourself financially independent and away from the stress of what debt brings on.
Basically, if your exposure outweighs your potential gains from
Yeah,
an investment.
yeah,
Yeah,
because I
that
mean,
makes sense.
obviously, you listen to a lot of these promoters and they talk about silver going to $2,000 an ounce and gold going to 60,000. If things like that happened, you'd have a complete meltdown in society. I mean, the dollar would be way underwater. And yes, maybe that would be the way to play it from a standpoint of, hey, listen, asset appreciation is going to balance my purchasing power. And yes, that performance will then I can sell the asset and pay down my debt, which is fixed at a certain, principal amount. So that's one way to look at it. But in reality, you try not to hit the home run or come up to bat to hope to hit the home runs. You're trying to manage money over a long period of time. So managing your debt structure is definitely important. With homes, it's a little bit different because you're going to have a mortgage against an underlying asset. That's just the way things are. But certainly, once you get past that sort of financial sort of planning stage of saying, okay, I've got my debt under control. Now I can start looking at asset structure. You know, build yourself, like I tell clients, a barbell approach to investing. You have cash on one side of the barbell, then you have investments or asset driven or inflation driven area type of assets that drive the portfolio performance on the other side of the barbell. So your cash and cash equivalents, like T-bills, for example, they pay 4%. You're getting paid at least to hold some cash, but also during times of deflation and if we go through a recession, that acts as a sort of security blanket. And then you have your other side of your portfolio, which is longer term oriented, which could be stocks, it could be metals, it could be
Like real estate.
yeah, real estate, crypto for some people. I mean, I don't understand that market too much. I can't really comment, but
And crypto's definitely been sort of the short term game right now
yeah,
that a lot of people seem like they've missed out on. But
Yeah. So
yeah,
going back to the metals,
yeah.
what specific metals would you recommend a person who's just interested and curious about it? What metals would you recommend them purchasing
Yeah, I
as
would
a
go.
first time buyer?
Yeah, I would stay with probably the most recognized products are like Silver Eagles, American Silver Eagles. You can buy something that's going to kind of stand the test of time. Um, it tends to be legal tender, so you have the advantage of when you go to sell that product to a local dealer, that dealer is exempt from 1099 reporting, even though you do have to disclose to the IRS your gain or loss. But from a standpoint of it's a very popular product, it's very recognizable, so you can sell it anywhere. Sometimes going for the cheapest product may not always be the best. You want to understand, for silver rounds, which are just basically blank like a medallion. Try to understand the hallmark that the product's made from, who made it, like the refiner or the mint. Try to stay with brand names like LBMA or Comex approved refiners. So, Royal Canadian Mint or Johnson Matthey or some of those types of names where those have had a great reputation. You could sell that product anywhere. The dealer would be willing to buy it because they can turn around and sell it very quickly versus some of these no name or private label products, especially you see this with a lot of the online dealers creating their own private label. They put their name on the round or the bar, and a lot of other companies out there won't support someone else's product. So when you go to sell that, it may be at a steeper discount. Uh, you know, when you if you have a relationship with a dealer that doesn't have that name on that product. So trying to stay with just recognizable names, and you can do a lot of searching online. There is a lot of information in terms of products out there, in terms of sovereign coins versus uh, um, just plain bullion products.
Hmm.
So that's where I would probably start. And then from there, coins are usually, when you're initially getting involved, it's a 1 ounce product. It's a very common traded form of metal, and you don't have to put a lot of money down, and you own a specific form of metal versus maybe buying into a crypto or an allocated program or a pooled program that says, listen, I own something. I don't know what it is, but it tells me I have 6.79 ounces of silver. Well, those types of programs are more designed to grab money, and try to, it acts as more of a security or a promise to pay than it does you actually owning 6.79 ounces of a specific form of metal. So read the agreements. The idea of using digital technology and blockchain are great, but you're also adding more complexity, more counterparties to the transaction. So that's the difference between maybe owning physical coins, for example, or 1 ounce bars, versus going into a structured program. There's
Real quick, while we're talking about programs, Velma on X actually asked about, or his or her question, sorry. Uh, she asked, or they asked, how about AtMex?
Yeah.
Do you want to brush on that, or
Well, AtMex tends to be one of the more expensive online dealers, and you want to shop around. I've gone against every one of these dealers proposal wise. I've had clients buy from them. I've had clients buy from I've had clients buy from all the a lot of the well-known names out there, and um, people tend to vastly overpay. They provide a service, you get the product you're paying for, but the question is you're going to be paying a higher price for it. And at the end of the day, we're trying to protect our purchasing power as investors. We're not trying to give away that purchasing power to the promoter or the online dealer, just because they do a great job on a podcast or they promote themselves as the cheapest online, which they obviously aren't. But that's the marketing of the industry. It can say and do whatever it wants almost because there isn't really oversight, unlike the securities industries, which have a plethora of regulations and compliance and regulators, that are overlooking those practices.
and you kind of brushed on purchasing power. One thing that kind of cracks me up, and I'm not exactly sure why people buy this, but the 50-gram Belcombi like silver and gold bars that we see, they have incredibly high premiums on average because they're super specialized. I'm sure it's a lot of work to mint those bars, but at the end of the day, the weight is the weight, and the relative value of that product isn't really, from what I've seen, worth it for the premiums that you purchase for it. Versus if I were to take the equivalent of ounces for a 100-ounce uh, silver bar, and then take the equivalent of a Valcambi 50-gram silver bar and buy the equivalent of ounces, I'm going to be paying drastically more for
Yeah.
that Valcambi product versus an RCM 100-ounce silver bar, and it's the same amount of ounces. And when I sell back, I'm probably going to get a relatively similar amount back.
Yeah, I mean it's not the size of a 100 ounce bar, but yeah, the
Right,
idea,
just relative in weight.
the idea that for people that don't understand these combi bars, basically if it's a 50-gram bar, there's 50 little 1 ounce grams, uh, individualized on just a main flat piece of metal, so you can break these little gram pieces off. And the idea behind it is, hey, listen, I can use it for barter. If everything hits the fan, I can trade these things, these little 1 gram slots, but what happens though is the moment you break off one of those grams, that bar really becomes scrap, from a retail dealer or wholesale dealer's perspective, because now it's a fractionalized, it's not a whole piece anymore.
Yeah, it's not a finished mint good.
Yes, and
Yeah.
that's something that people have to kind of understand. So a lot of times, what people will do is They may buy smaller units, maybe. Well, the 1 ounce product is certainly the most popular on the silver side. On the gold side, you can get tenth of an ounce gold American Eagles, for example, which are very popular. They're about the size of a dime, tenth of an ounce of gold. But there it's legal tender and it's very recognizable. So some,
And you're paying a drastically lower premium.
yeah, you could be, yeah.
So you're able to get more gold ounces for your money for a relatively small product.
Yeah, and that's the unfortunate thing about the dealer industry. There's a lot of dealers that sell like 1.5 ounce, 1.25 ounce silver coins made from the Royal Canadian Mint or the Perth Mint in Australia, and they make these, 10,000 ounce slugs of production. So there's a limited quantity, and they sell this bullion product as if it's some limited series edition, and they mark them up 20, 30, 40, 50%, in some instances almost 100%, where the customer buys the stuff and they will never make money on it. And
Hmm.
then they go to sell these products and they find out the 50% markup that they paid on the product, they're lucky if they get spot for it when they go to sell it.
Yeah, which is incredibly unfortunate.
Yeah. And that's where a lot of people are losing a lot of money right now. And unfortunately, between I would the unfortunate thing is between 2020 and 2023, we saw a lot of retail dealers, a lot of big online retail dealers, they're very well known in the industry, artificially marketing a product, artificially marking up the spot prices and ripping people off because I know because I went against every single one of them and I know how much they charge versus what I was charging for the same exact piece of metal. And it's unfortunate how much people overpaid. And this is the part where, yes, if silver goes to $200 an ounce and you ended up paying $5 more an ounce than what you're supposed to, yeah, the guy who sold it to you made a fortune, and yes, you'll end up making a lot of money because the price goes to $200 an ounce. But you that's not how investing should be. You should be buying the stuff with the idea that, hey, listen, if I have to sell it, if an event happens in my life and I have to unload it, was it worth paying that extra $5 an ounce? Whereas if I would have shopped around and found another guy selling the same product $5 cheaper per ounce, now I have at least a little bit more opportunity to make money.
Well, or what we see a lot of is if a client passes away or if someone inherited metal, generally whoever inherits it tends to not be as invested or emotionally invested in keeping the metal. And so they end up selling the metal at a loss relative to whatever was bought, including the spot price and excess and premium. So these problems can compound really fast, especially if you're unaware of how much you should be paying. And that's kind of where, I mean, it hits home when we have clients that tell us how much they paid relative to what we were charging, and not to mention too getting pushed into a product that was not the most most inducive to make profits in the end.
Yeah.
Like for example, when Silver Eagles, the average premium on that when we were selling them was like $8 an ounce, give or take. I think the highest we ever went was like $10, but that's when everybody else was charging like 18 to 20.
20, yeah. Yeah.
So I mean, we're 50% lower, but we weren't really selling Eagles. We were selling 100 ounce silver bars. We were selling Philharmonics. We were selling Britannias, Maple Leafs, because you were saving more than half of the premium, getting more ounces for your money. And all of those clients are making money and have made money right now.
Yeah.
And that's kind of where the guidance you provide, just on the value perspective, outside of everything else that you do, when it comes to buying the right products, I mean, that's something we should definitely be. We don't necessarily have too much time left to brush on, but we'll talk more in depth about that.
Yeah, spreads are a great topic. We could talk about in terms of when you buy it, how much premium you pay for it versus when you go to sell it, what the marketplace looks like at that moment. Like for example, right now the marketplace is at a discount when you go to sell product back. So you may have paid a high premium, and all of a sudden that spread between the premium that you paid for and the discount you're getting for the metal is very, very wide now.
Yeah.
And that's something. It's one of the reasons why I don't mark up product a lot, because I worry about that spread risk and how that will affect not only the client and their portfolio, but the relationship. That's one of the most important things. I think we all here kind of value is building the relationship with the client on a
Mhm.
long-term basis rather than, you
The
know,
short-term gain.
yeah,
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 yeah.
Yeah.
Anytime I talk to a client on the phone, we're our whole business model is to be here for as long as we possibly can. Not to just make as much money as we can in the next 5 years and split. I think that
Well,
whole business model, it tends to have a lot more shady practice. Go ahead.
yeah, and I think it shows to your own character on the prices that you give to the client and the care that you have for the client, because you're not just out for a short-term gain. You're here to look out for the client's best interests, and you want to make sure that they're getting a gain in the and what they're investing in, as well as the relationship as well. Know that they can rely on you, come back to you and say, "Hey, Bob, you didn't
yeah.
you didn't mess me up on this price. You're looking out for my interest in the long term, and I can come back to you, and I know that I can rely on your guidance for that, because I know you're not just in it just to gain a quick buck."
Yeah, and that also, you made a good point. It's also the methodology of selling somebody or fear mongering. So you see a
Mhm.
lot of this stuff where the banks are going to collapse tomorrow. You know, you got to get all your metal and money into the metals, and you have dealers, that are based out of, a lot of them, very prominent online guys that spend a lot of money on marketing, and get on all these podcasts, and they spout these ideas that, the COMEX is going to fail and the banks are going to collapse, you got to get your money out, and or there's shortages in metals when there were never really shortages of metals. There's just tightness in product, but convincing people to basically give them their money, and then they charged really carte blanche whatever they felt like they could charge, because they convinced the person that, hey, listen, there's no silver out there,
Mhm.
except I got the inventory on it and I could sell you as much as you want. I mean, that's not a shortage. That's in a way that's very manipulative type of business practices, that I tried to really just I really tried publicly to express this on Twitter at the time, from 2020 to 2023, what people were saying, and 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 sort of re-educating, um, the public of, hey, listen, it's not shortages, it's just product isn't being made as fast as demand is at the moment, but you still will get the product, rather than forcing, this idea that you got to buy the product now and pay up, $3 over spot for 1,000 ounce silver bars. I mean, it was
Yeah,
just
there's
insane.
that difference between a product not existing and there just being a tightness in supply.
Right,
Right.
exactly, yeah.
So like instead of not being able to get a product at all, it might just take another week or two in order to make it on the deal. And that's where it, it it puts a sour taste in my mouth when I see how much people getting manipulated by that. But anyway, um, I do want to ask you if you're someone who's wanting to maximize the amount of ounces that you're getting, because ultimately what it kind of boils down to, aside from getting a super reputable product like a sovereign mint coin, when you decide to sell back, the amount of ounces that you have is kind of king, at least from what I've seen over the years. So I think right now the lowest premium product is 1,000 ounce silver bars.
Yeah, but a lot of people can't afford that much silver. So
Yeah,
so the 100 ounce bars are actually very cheap at the moment as well. And then, certain 1 ounce rounds. 1 ounce rounds are just, again, it's a generic form of metal. It's not it looks like a coin, but it can't call itself a coin because it's not minted by a private or by a government sovereign facility, and it doesn't have a legal tender. It's just simply a 1 ounce
mm,
round, basically. So that's why they call it a round. So some of those things are very inexpensive at the moment, premium wise, and it's a way for people to get into, at least enter into this, environment, especially with prices as high as they are. Um, Try to get, if premiums are low, at least you're not having to pay a lot for the product, and maybe because of the spot price going up a lot, if you can reduce the premium, that kind of maybe balances out the transaction. Whereas maybe when the prices were $3 lower and the premiums were a buck higher, you had to pay a little bit more for the product, but
Mhm.
yet the spot price is lower.
well,
So
and to kind of add to that point, when Silver Eagles were in, insane premiums,
yeah, when it was 20
we,
bucks
we
an
were
ounce.
selling a ton of 100 ounce bars, and
Yeah,
all those clients who were buying 100 ounce bars at that time made a lot of money. I
yeah,
mean, we're talking what 40, 50% at least, from where a lot of people who are buying Silver Eagles from the excess premiums we were seeing them bought from, they're they're barely breaking even right now,
Yes.
which is it's very sad to see.
Even silver maples when it was 25 bucks an ounce, a lot of dealers were selling silver maples at 8, 9, 10, $11 over spot.
Yeah.
And
And what's a silver maple going for right now on bid? Like give or take,
you're
like
probably 50 cents under spot, give or
I mean
take.
that sucks.
Yeah. I
That
mean,
that really sucks. Now, what's a 100 ounce bar right now?
you
Like on a rough bid.
if you're looking on the bid side, I think we're about 85 cents under spot right now, which
I mean that's huge.
yeah, most retail dealers that I've seen are $2.50 to $3 under spot for that same
I mean
100 ounce bar.
even if you're selling that 100 ounce silver bar at $2 under spot, and you bought it for $1 over spot, relative to when maples were $12 over spot, that's
Yeah, you're
that's
saying
money being made.
yeah, you're
I mean
definitely
that's
you're reducing that spread risk and get
yeah
that's and that's again, if you bought silver when it was at $25 an ounce spot price wise and you bought the 100 ounce bar, you're right. Even if you're getting a discount for that silver, the spot price has sort of gone up enough.
yeah
You can't control market conditions. You can't control these bids and the premiums and discounts, unfortunately.
yeah
Even the industry, the retail industry and a wholesale industry can't really control it. It really balances and sort of it's like a watching a almost like a beach ball, on in a pool going bobbing up and down with the waves. I mean, that's how the industry operates, unfortunately, when it comes to these products. When a lot of demand comes in, the prices go up because supply gets tight. And so what wholesalers do is they raise their premiums, but they also raise the premiums on the bid side, so they try to entice people to sell back metal. That's
yeah.
the whole
But that
reason.
doesn't last.
It doesn't. It
When
eventually
the
neutralizes.
premiums deflate, so does their bid pricing. And either way, you're going to be paying up, and that's kind of the impact that we're obviously trying to aim for is uh, a much more even keeled approach for the customer's best interest. Because yeah, I mean, if we can get 10,000 more customers doing business with us, and we give them fair pricing, they make money. I mean,
Yeah,
we'll be making money. Like the full transparency, we make a very fair amount, but we
yeah, the,
compare the pricing. It's very fair, and it's not as inflated as everybody else out there.
yeah, and I've been doing this since 2009, and I've been consistently beating pretty much every dealer in the marketplace consistently over time. Yeah, maybe some of these guys may have a special here and there that they took in a lot of product. I mean, if they're buying product at $3 under spot and they want to sell a product at spot, well, the guy now who's selling the product back to some of these dealers is where the predatorial practices are, rather than the buy side. Whereas in 2020 to 23, a lot of people that were buying metals were there was sort of a predatorial type of environment at that point. So the business, again, whether you're choosing a depository or a dealer, understand these business practices. And this is the type of thing I can't put on a post, unfortunately, on
Right.
X. We have to go
You'd
through
be
these
writing a novel.
conversations. Yeah.
Right.
Yeah, and I mean, we don't necessarily have a ton of time left, but I do want to brush on um, the topic of reputable products, like Elemental being a like sort of the sore thumb or elephant in the room in terms of what dealers were selling, and because they were probably getting it at a really good price, and they were able to sell it cheaper than relative other products, but everybody who bought those products got screwed on the bid side because nobody wanted to buy it back.
Yeah, you're referring to some of the hallmarks that were caught up in unscrupulous activities, buying illegally mined gold and metals out of South America, where you had at the time I think it was Elemental or Elemental had owned a company called NTR and Ohio Precious Metals, and Ohio Precious Metals, which had a stellar reputation. Uh, it turned out that Elemental was buying a lot of illegally mined gold and shipping up through Miami, and it got caught up in a number of different countries, and fines were given out. Accreditations were ended up basically the companies went bankrupt. The accreditations were stripped, and a lot of wholesalers aren't touching that specific product like NTR or whatever, because the the money laundering and the strife that comes along with that product, or sort of the reputation. You don't want to touch a product that's been tainted,
Right.
even though it's 100% gold, or it's, or 99.9%, 99% gold, or 39 fine silver. Um, you know, those are things that there's just so much choice. Wholesalers would rather own product that they can just turn around and sell back out. Otherwise, a lot of these products have to ultimately be melted down, and then they can only be sold, or they can only be bought back from the wholesale community with the condition that they're just basically going to melt them and then give them to a refiner.
Yeah, and then be re-minted into other
Right, right.
products,
So
which
there's a lot of unfortunately conditions of a lot of these products. Northwest Territorial Mint, which was a private mint in northwest portion of the United States in the state of Washington. They had a massive fallout. I think it was like plus $20 million of metal that the owners either stole or uh, 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 I guess took from clients that were storing with them, or didn't fulfill transactions with. Well, a lot of that private label product, because they made their own rounds and so forth, their own bars, uh, you're seeing a lot of that stuff, which is still traded out there, but it's traded at a big discount.
yeah,
There's no need to buy that when there's Royal Canadian Mint or some of these other, like a Pamp
yeah,
Swiss,
yeah.
or
So it's something to look out for, especially if your friend Joe is trying to sell you metal and it's an NTR or elemental. Like,
Yeah, and that's
Yeah.
you bring up a good point, because that's another thing new investors to this industry, or asset class, really don't know, and so we have to kind of go through these sort
yeah,
of
there's
conversations.
a lot of dust in the closet, so to speak.
Yeah.
So, yeah, and we just hit that hour mark, so we're gonna kind of finish up here, and but I hope that this kind of setting is what you guys are kind of hoping to get out of this in terms of information. And if you guys have any questions, feel free to message us on Instagram, or Bob personally at Profits Plus. We could definitely create some new topics to focus on. Do you guys have anything else you want to
Well,
add?
I think, just to talk about Casey a little bit, and you, Colby, in terms of, especially on the health side,
Yeah,
because there's a lot of information that I think we're going to go through these podcast series with, that will maybe help people. Managing money is one thing. Protecting yourself with the right gear, the right um, tools, I guess, is the
yeah,
correct way of
yeah,
saying it. Weapon wise. But the health side is something I think that's not really discussed as much. Yes, there's a lot of great guys out there and gals that are in the health industry, that we all kind of follow or listen to. But just kind of mixing the wealth side with some of these health topics, I think will kind of maybe breathe a little bit of life into, because the health can be very overwhelming, especially for, when you start getting past 50 years old, and all these things that, my God, why didn't I know this 30 years ago?
yeah,
That kind of stuff catches up to you pretty quickly. So,
yeah.
unwinding some of these habits and some of these diets that the four food groups that we were taught as kids,
Or the
50
pyramid,
years. Yeah.
and
Oh my
pizza was
God.
on it.
Eat your
Yeah.
bread,
Yeah,
Yeah.
drink your milk.
Oh, grains are great.
Yeah.
I mean, boy, does that stuff, you really start to feel it.
yeah,
So
yeah.
I think, for people listening, you and Casey are going to do a great job of kind of breathing a little bit more life, especially for people that are older, that follow my work on the financial field, getting a little bit of more, of a take on, maybe doing the things that you can do, not necessarily getting ready for a marathon, but things that you have actually control over, and maybe change some habits and change your lifestyle a little bit.
Oh yeah, no,
Right.
absolutely. I
Yeah.
mean, just to kind of add on that, I mean, for anybody who's been injured or you have issues with mobility and you still want to be able to get a good workout in, swimming is one of the best things you could possibly do. And I'm not talking like swimming laps. I'm talking about getting in a pool where your feet can touch, or just a little bit deeper, and being able to kind of do full strides and move your arms in full range of motion, and kind of take off the weight of gravity. That alone will allow you to kind of rehabilitate your movement. And then once you kind of start feeling like it feels like nothing to you, that's kind of where you can start getting into some resistance bands, kind of do some body weight movements, that sort of thing. And there's also good foods that you can eat that reduce inflammation, or foods that will actually increase inflammation. Like artificial sweeteners is a great example of that, where you basically you put something in your body and your body has not really any idea what to do with it. So it sees it as something sweet, uh, sends a bunch of insulin to go break it down. Insulin cannot touch it, or just definitely can't do anything with it. And so now your body has to clean out all that excess insulin, and that leads to insulin resistance, higher amounts of inflammation. The list goes on. So, and that's kind of where, like drinking soda pop. I mean, we can get really into this. The amount of research I've spent and time. I mean, Casey as well. We both done bodybuilding. You're still kind of in it, right?
I dance around it.
Are you
I
prepping for a
still
show?
I still do the weight training. I might do a show here in the future.
Okay.
But an easy catchphrase I like to go by and that I've heard before is motion is lotion. So it's a simple phrase, but it's a good
Yep.
thing to keep in mind, especially as you get older and your joints and tissues start to break down and collagen and all that stuff. So
Yep. Use it or lose it.
um, yeah, and
Yeah.
I believe that if you're willing to invest in outside assets in the financial markets, as in gold and silver and things like that, then you should also be willing to invest in yourself, because at the end of the day, your health is the top of the tier of what should be first and foremost the most important. And
Yeah.
I believe if you take care of yourself, you'll be able to take care of everybody else around you. So
Yeah. And when you're ready to liquidate that nest egg, I mean, being able to actually move and enjoy life, I mean, a lot goes into that. And
yeah.
I mean, the ultimate fountain of youth, aside from sleep, is working out. If you could feed yourself properly and you can give yourself all the micronutrients, the macros that you need, depending on your goals, you'll feel lighter, you'll be stronger, and generally look a lot younger over time. So
Right. Sleep hygiene is very important.
yeah, and dental hygiene, Valma, I absolutely agree with that. Dental health is extremely important. You kind of dived into that a little bit deeper, right?
Yeah, I think it will be a great topic to discuss in a future episode, because there's a lot of details into it, down from your tongue placement in your mouth to mouth breathing at night, to tongue tie releases. There's so many aspects of it that I've learned with my own son, who's going to be 10 this Saturday. So I think that will be a great topic to discuss on another episode, and we can bring a guest in and talk about
Yeah.
the details of it and how important just little things like that play such a pivotal role in our life as we get older. So
Yeah, absolutely.
yeah,
And yeah, if you guys have any questions, I mean, especially about health, we can definitely go episode upon episode delving into just supplements like creatine, branched chain amino acids, EAAs. Uh, I mean, zinc is one of the biggest detoxing uh, uh, supplements you could start to take.
can't forget the creatine and glutathione.
Yeah, well, your body uses zinc to create glutathione, but I mean, it never hurts to have a steady dose of glutathione, especially if you're working out a lot, or
Right.
especially if you drink alcohol. I mean, yeah, water is also at the forefront. Pace, yeah, and also just trying to make sure you avoid things that have excess amounts of anything. I mean, too much of anything isn't good. Like for example, there was this vegan chick. I can't remember her name, but she only ate spinach. And when you don't cook spinach, it's actually incredibly toxic for you. I mean, just kind of small things like that. I mean, I'm sure a lot of you guys might know, but sometimes it's nice to get a refresher on some things that you might have learned in the past. So
Yeah, anything we can do to help educate our clients and give them a better insight as to what we're learning in the health side of things and how they can help improve their lifestyles. I mean, I we love to do. So looking forward to expanding this in more episodes and going into more detail about it.
yeah,
And we were talking about dental, which Casey turned me on. There's a toothpaste out there that actually has silver in it. that you can actually you can avoid the fluoride, and actually this is a more natural
Fluoride
toothpaste.
free.
Yeah, so depending on
Yes.
spot price, it might be more. I'm just kidding.
Yeah,
But
we'll just show some products and
yeah, well,
expose expose what's
yeah,
out there and stuff and what.
yeah, and then we'll get into night vision and thermals and kind of what we're seeing on the more modern landscape of security and uh, basically all the gear that we were kind of seeing being used and what's actually being really effective and why, and kind of why we are utilizing and got a lot of the gear that we have. It's the amount of separation our security team has versus everybody else out there has been something that's been in the works for years. But ultimately, it's undeniable what a organized team has at their disposal, and we're just trying to level the playing field, make us as much of a deterrent as possible. And so yeah, you're not really going to see your typical mall cop security guard uh, at our facility. So, but yeah, that kind of ties it up here, hitting that happy hour amount of time. So yeah, if you guys have any questions, feel free to reach out.